It's earnings season. That means it's the best time to talk to Miss Danielle Shay, VP of Options at Simpler Trade. Not that, I mean, every time's the greatest time to talk to Danielle, but there's so much to talk about, I guess, is the best part about this right now. What a week it's been as far as earnings reports. We were talking, Danielle, when we came on here at 2 o'clock about the simple fact that Tesla's report was, I mean, not terribly exciting. There wasn't anything that kind of blew you away in the report, but yet it's one of those stocks that once it gets going and once traders take a hold of it, can put in a move like it has today. Give us a rundown here. How did you play going into last night, and what are you thinking today?
So, looking at Tesla, I mean, this is case in point of executives coming out prior to the report, setting the bar incredibly low. And then when the report comes out, just like you said, there wasn't anything amazing about it. I mean, yes, they did beat EPS numbers. There was a variety of other issues that were noted. But because market participants were already aware and already planning on that, once the report came out, it really just gave room for it to rally. And that is the theme of this quarter. I think that executives, not just Elon, have been doing that over the course of the past several weeks. And so when you look at a stock like Tesla that does have that really long-term, growth potential, I mean, this thing is on fire now. And the thing is that this is causing, an impact. Netflix and Tesla both are causing an impact on the NASDAQ, pushing the NASDAQ higher. I did actually go into Tesla long, so that is working out well for me. And I am a shareholder, a pretty large percentage of my portfolio. But when you look at Tesla, I'm looking at the impact that it's going to have on the rest of the NASDAQ stocks over the course of the next week and a half.
It's a great point in the sense that, we've had cautious comments going back to the beginning of the year, it seems like, not only from Elon, but from the rest of this tech group as well. So, I mean, even the furnace comment kind of led you to believe that something bad might be coming, but it turns out, yeah, it's fine. Everything's fine, right? Let's look ahead here a little bit then. If you were to maybe pick a trade, I mean, you said you're long now, long going forward, but if you were to pick a trade maybe in the next coming days for Tesla, what's the easiest setup here?
So, Brendan, I tried to short Tesla just ever so quickly, kind of before earnings, because of all the negative comments, because of the, the furnace comments and stuff like that. I shorted, it didn't work. I got out, I flipped around to the long side. I was actually targeting 800. And because this move has been so strong and because it's actually breached through that resistance at 800, my next target becomes 850. So right here, it's a little bit crazy, of course, to get in after it's already up so much. But Tesla is a momentum stock. They have their shareholder meeting on August 4th about the split. I'm betting on the fact that the split is going to be approved. And historically, that's been a really good catalyst for Tesla. So I think that it makes sense to continue trading it as long as this momentum continues to the upside.
Amazing opportunities intraday and on a swing basis as well. Want to get your thought. We had a really good question from a viewer. Want to get your take here on earnings season in general. You've been a big proponent of trading in earnings season because of the opportunities that it presents. A viewer was simply asking, give us maybe a laundry list here, if you will, of what you're looking for in a stock and or the report itself that kind of puts it on your radar when it comes to an earnings trade.
Yeah, of course. So the reason why trading options during earnings season works out most of the time, if you understand the way that options function, is because options increase in value and in price as you go into an earnings report. You have an implied volatility increase that is happening, no matter if the market's going up or down or sideways. And so because of that, you are able to come in and purchase options prior to earnings and ride that value up. Even if the stock ends up staying a little bit flat, the value will still increase in the option because of implied volatility increase. And then typically what will happen on the report is that implied volatility just gets completely crushed because it rises in anticipation of the report. So if you look at Netflix, for example, and if you look at this grid that I have up right here, you see this area in the grid. What this is it's measuring the implied volatility in the option pricing. And so you can see that it goes up and up and up. And especially for something as highly anticipated as Netflix, it just gets crushed on the report. So prior to the report, I usually like to buy options, and then on the report, I actually like to sell them. Especially what you're looking for are stocks like this that are just so widely talked about. They have a huge implied volatility increase. What you can do is you can come in and sell those options just prior to the report and then buy them back cheaper the next day, as long as you pick the direction the right way.
Let's look ahead now. Great explanation. Thank you for that. A couple of interesting ideas here for tonight and tomorrow, obviously. Snapchat is coming, speaking of widely talked about stocks. Twitter as well. Obviously, there's other factors that we have to consider when we're talking about Twitter when it comes to Elon in general. But is there a trade there, I guess, is the first question for Twitter. And what are you thinking about with Snapchat?
So, Twitter, I don't see a great trade prior to the report. If you look at this grid, this is what I call the earnings hot zone. This is what I use to determine if I have a good trade idea or not. Basically, what I'm looking for is I'm looking for any kind of trend. Over the course of the last 8 quarters, yes, Twitter has beat 6 out of 8 quarters. But as you can see, half the time it gaps up, half the time it gaps down. The gaps are all over the place too. They're between 0.8% and 9.9%. Oh, we even have a 14% move. For something like that, it makes it really challenging to trade prior to earnings, because you can't look at it and say, hey, 6 out of 8 times it trades higher, so let's sell puts. So for something like this that's all over the board, what I do is I wait until post earnings, because we could very easily get a big momentum move to the upside or the downside. But because the stats are so all over the place, it's better to wait and see what the actual reaction is. Now, Snapchat, it's a little bit different. It is, again, pretty volatile, but I would say that it looks a little bit better, just because when you look at the reactions, you can see that it has fallen a few times on earnings, 5%, 3.3%, 21%. That was a big down move, and then 2.5%. But you see how large the up moves are. You have a 44% up move, 17% up move, 8.7% up move, 22% up move. And 8 out of the last quarters, they've actually beat. So what that tells me, in conjunction with the fact that we're in a situation where we're actually breaking up above the prior highs, we have a squeeze right here, which is the consolidation breakout setup. I like the technical pattern for a gap fill up to 21. So on Snapchat, that's one that I'm looking at to just sell puts prior to earnings. But Twitter, I'm going to wait until tomorrow.
All right, let's go ahead to next week. The biggest, obviously, of the big names coming next week. Tuesday, I guess, through Thursday, I believe it is, when we'll get Google, we'll get Microsoft, we get Apple as well. So where do we start here? I don't want to overwhelm people with too much individual information, but where do we start here? What is your top of the list, I guess, for next week?
So, generally what I do with these is I look and I see how Netflix and Tesla react, and then I trade the others in a similar fashion. Since Netflix and Tesla have both been strong and they're rallying post earnings, even in light of the fact that, their earnings were good, but not great. I mean, it was all right. It was passable. And I'm looking at the 3 stocks you just mentioned, and every single one of them, I mean, they have a similar pattern. They're up above support. They have earnings coming up. They've been in consolidation. I think due to the fact that we have seen these positive moves out of Tesla and Netflix, and the technical patterns in Google, Microsoft, and Apple support it, I think all 3 of them you can look to trade to the upside into the earnings report over the course of the next couple of days. Now, I'm not trying to call a low. I'm not trying to say, the bear market is over, nothing like that. I'm just saying that we can continue trading this momentum for the next few days until those earnings reports come out.
Going to be an important stretch overall, this week and next week, if you combine the two, for the market itself, as we're trying to break, 400 on the SPY. I'm looking at right, in its face right now. A huge move off the low, for these individual names. Just on a broad sense here, I mean, the market showing underlying strength for the first time in a long time, taking out, pivot highs. Was that a higher low that we got on a daily time frame? Time will tell, obviously, but give us your overall thoughts here on where we're at.
I mean, honestly, a lot has changed over the course of the past week and a half. We're seeing technical patterns improve significantly. I think that a lot of the signals we're seeing the first bullish signals that I have really seen since really around the end of March. So when you look at the spiders, for example, and you look at the way that it's been able to breach up above these key moving averages, we're really starting to see a breakout move here. It has a chance, right? This is the moment in time where I'm looking at the indexes and I'm saying, okay, there is a chance that things could change here. The trend could change. But the problem, Brendan, is look at what happened last earnings season. So if you look at the spiders from March into April and you see the way that it rallied going into earnings season, at that time, people were saying, oh, the bear market is over and look at this rally and earnings. Yay, yay, yay. And then what happened was the rug got completely pulled out and we careened to a new low. So I'm looking at this move as very, very similar to the move that we saw at the end of March. Things are improving, but that doesn't mean that the low is in. It means we can trade to the upside for a few days, but just beware and be careful.
Yeah, no, it's a great point in the overall picture here. And let's face it, we don't have to race right back to all-time highs. If the market wants to kind of trade in a range here for quite some time, it might actually be constructive overall. Danielle Shay, we appreciate your time as always. VP of Options over at Simpler Trading. Have a wonderful weekend.
Thank you, too.